Okay, guys, let's get into it, guys. So I'm going to show you pretty much a recap for Friday. I think Friday's date was. Let me see. It's from right there. Yes. No, this is wrong. Yes. So Friday was the ninth. So I'm going to pretty much show you a recap. Like I said, I only trade two sessions in a day. I trade 8:30 to 8:45 when I'm working, and I trade 2:50 p.m. to 3 p.m. Like I said, I notice the more trades I take, the more money I lose. So I just kind of limited myself to just trading two times a day. So I mean, 8:30 to 8:45 or 8:46 or 2:50 p.m. to 3 p.m. Let's get into it. So this stuff you're seeing highlighted is from Friday, 1 in the morning or 12 p.m. in the morning, 12 a.m. in the morning. So this is what we're looking at from the let's go to a higher time frame. So just by looking at this, right? This was Thursday. Okay. This is Thursday high. Sorry, Thursday. Thursday low. Thursday high. Okay. So of course this is we can see it's already happened, but I'm gonna try to do the best recap I can. I was still trying to get my situation ready so that way I can start recording video. That's why I was aiming to get you guys a video for this. But from Monday to be expecting a video every day. But so Thursday high, Thursday low. So just by looking at this, right? So because Wednesday, Thursday right there. Oh, sorry, it looks like I had the wrong one. So this was Thursday high right there, and Thursday low. Okay, Thursday high, Thursday low right there. So just by looking at this, you can tell market already took out this buy side over here, and this was a huge buy side of the market. So we had this buy side over here, we had this sell side over there, and now we have the sell side that has been taken out. So just by looking at this is Thursday's high, this candle right here. So let's go ahead and drag that out properly, so that way it doesn't run into too much in trouble what we have going on. So just by looking at this Thursday, we know we're looking for buyers, right? Because the market already took that high. Okay, so let's go in. So this is 2 hour. I want to start from the okay, right there. And I have this part highlighted because this is from Friday. So just by looking at this, we have all this going on. I took out that candle because it's going to be in the way the whole time, but we still have Thursday low down there. So first, let's go ahead by looking at structure. So we have this higher low, higher high, higher low, higher high, higher low, higher high, right there. So now, this is going to be the structure we have to break for us to be bearish. Okay. So now this high is taken out right here by this candle right here. So now this is going to make this one higher low, higher high. Now this one cannot be. If this is broken, means we're bearish. So as you can see, market took this one out. Now, just by because this has already been formed, so we can tell this was just a grab on liquidity to the upside. So the market grabbed liquidity and pushed all the way up there. But let's not get ahead of ourselves. Let's go ahead and have completely draw out these structures that we have in the market. So now usually when we see something high highs and high lows, what are we waiting for? Now we're just waiting for the market to come back to order blocks like this spots over here. Now we're just waiting for market to come back to order block like here. Remember, once this low is broken, it means we're bearish. So now we're just waiting for market to come back to a low like this, and now we can start looking to take buys to the upside. But what happened? The market took out that low and pushed all the way up there. And like I said, this is from a 2 hour time frame. So what we're gonna do is let's go ahead and draw this out. Okay. Okay. So go down to the 30 minutes. And you see one of the good things about looking at this from a higher time frame, you see some rubbish here, but you don't see it too much. If you go up to the 12, okay, now you don't see too much rubbish. You just see kind of, you don't see, you just see candles respecting candles. So now if you go down to the 30 minute, now you start to see all this rubbish that happens in between. For example, some people would come back, something like this. People see this as a break of structure. People would like to look for buyers right then, get in and put their stop loss right then. Market will just destroy them and push and play around. Now that's what I call rubbish traps in the market. So I like to use the higher time frame just to eliminate that trap or that rubbish in the higher time in the market. So now this is what we're looking at right there. So this is Friday from one, let's say 1 in the morning till 3 p.m. in the afternoon. So now we have this going in. We pretty much go ahead and take out. Okay, so this is a breaker structure or buy side, whatever you want to call it. Like I said, now we're just waiting for the market to come back to retest the structure we had here. So my candle would have been here. Okay, so my candle would have been here on this high time frame because, like I said, we're looking for buys, right? Um, there's not to worry about this side I was taken out, but go down to the 15 minute. Okay. So now this is the 15 minute. Okay. Now we can, if we look in 15, now we can go, we can start seeing this order block over here, order block that was already tested, order block over there. Now, if we were to adjust this, now order block is going to become this candle right here. Okay. So now we're on the 5 minute, as you can see. So now we're going to go ahead and readjust this again to this candle down there. Okay. This. See how it becomes more noisy and noisy. That's why it's good for us to have these structures out in the market because we know once the market takes out this lower, now we're looking for sell. But just by looking at the overall structure, we have been bullish. So if the market we're just breaking out, we have to make sure that it wants to kind of continue. Um, so go down to the let's go down to the 2 minute because that's what I like to trade on. Okay, so now that we had this, let's go ahead and look for 8 a.m. in the morning. So this is 7:36. So 8:28 is gonna be right here. So that means when we woke up for Friday, this low was already taken out. This low was already taken out. So let's go ahead and put this out. So 8:30 starts from right there. 8:30 starts from right there. Okay, so now that we know that low has been taken out, we can go ahead and take this one out. We can go ahead and take out this. Let's leave that order block right there. Go ahead and take this one out as well. Okay, let's try to make it a clean chart because I want you guys to understand what I'm going through right here. So 824. Okay, so that low was violated. Now, when we see something like this, if I was be honest with you, I would be looking to sell because the market just stuck out this low on the because this is a this is a 1 hour low. So this is a strong low, but as you can see, the market took it out. One of the good things about what I have learned is that so usually when we have a low like this and it closes like this, I mean, it did close or under the low, so it is still valid. But I would wait for the next candle to at least take out this high, so that way I know it's something more confirmed. But like I said, let's go back to the 2 minute time frame. So being on the 2 minute, right? You know, 8:30 started right here. 8:30 started right there. Okay. So what I usually do right at 8:30 before 8:30, I like to go ahead and draw out the buy side and what the market might target. So that way at least I know what I'm going to be targeting risk to reward wise. Okay, right there. Okay, so when we see this, right? Now we're on the 2 minute. So this is a 8:30 candle right there. As you can see, it goes straight ahead to go ahead and take out this high right there. Okay, now we have this huge order block right here. We have this huge order block right here from all those candles over here. Let's make this a strong color. Okay, we have that order block right there on the 2 minute. Okay, so as you can see, this is perfect because on the 5 minute, as you can see, this is the 8:30 candle that happened right there. Now we had this come back to retest this candle, push all the way up to right there. So we know this is a valid 5 minute higher low. Okay, so now that we've confirmed that, right, just to make sure our chart is a lot cleaner, we can go ahead and reduce this to this low right here. Okay, so the market comes back to tap into this order block we have here. Let's see what the 50% looks like. Okay, so it doesn't even look like we tapped the 50% on this move back here. I know we came back here to tap it, but we're talking about that. Remember, we traded from 8:30 to 8:46, so we don't see the market could give us a 50% retracement back there, so we can take that out. Okay, but if you are looking at this, right? If you are looking at this and you see the market comes back down, plays around, now we can go into go ahead and do our counting too, like the way we count the candles to make sure we're following the structure. So 8:30 was an up bar, 8:32 was an up bar. This low was violated right here, so 8:34 was a down bar, 8:36 was an up bar, and 8:38 was an up bar. So when we see something like this, we already go ahead and get in right here because we had this huge break of structure happen right there on this. As soon as this low is valid, we go ahead and get in right here. So now we could be targeting this high because this is a buy side right there. We could be targeting that buy side over there, or we can go for the extreme and target this buy side over here. So we're looking at 132 ticks if we take out this buy side over here. So that is what we are looking at as a right, and this is from 8:30 to this is at 8:38. So we get in right here on this candle break because this low was this high was taken out right there. So we go ahead and get in right there and we target here. Like I said, this is your base hits. The point of this strategy is just base hits after base hits after base hits. There at least 80 to 80 to 90% of the time you're gonna catch your base hits and you're gonna lose some of them, of course. But this is what we call, like I said, we got in right here to target the buy side. It just makes sense for the market to go ahead as soon as the market closes bullish because we were going down. Look at these huge candles to the downside. We were going down, but as soon as we had this candle take out that high, the next thing happens, we take out this buy side over here and we take out that buy side over there. So this is what happened at 8:30. Now, go ahead and look. We now have this structure violated at 8:44. We have this order block over here. One of the good things about this is that's why we keep using the structures because the structure is always going to keep us safe. Now, if we go back to the 5 minute time frame, we are still bullish. Even though we took a trade right here and we took out the high, we are still bullish until this low is still violated. So let's say because we see this take out the high, we see the market come back in here and push up. So like I said, we are still bullish until this low is taken out. Now we did take out the slow right here, but look at the market uses it as a grab of liquidity and push to the upside. And like I said, this is on the 5 minute. Okay, so on the 5 minute we did grab that. Now if you look at it on the 15 minute, we also have this structure that happens right there. We can either use this structure right there or we can use this one right there. Right there. So unless this low was taken out, we would have been bearish, but we were still bullish. The market came, tapped it, and pushed all the way back up. So that's why we like to use the higher time frame for confirmations. So if we go back to the 2 minute, so if we go back to the 2 minute, we still had this trade happen right there. Even though this just pushed up to go ahead and respect this order block and push back down, but we had this right there. So we have a down bar come back into the order block that we were looking for earlier. To the order block, we have a down bar. Now this low, this high is violated by this huge bullish candle right there. Now we have an up bar. Now we also this one didn't take out this low, it just in there. So whatever this candle, that's what this one's gonna be because this one didn't take out a high or low. This is an up bar as well. This no low was taken out. This high was violated. This is a up. This is an up bar, and this is an up bar right there. Even though this is a bearish candle, but as you can see, it didn't take out the low, just took out the high. So up bar. So now that we have that right, so let's say you got in right here, okay? So after this candle was taken out right there, let's say you got in right there. You targeted this buy side over here. Oh, sorry. Well, this wasn't a buy side because the market already happened. So this is from foreshadowing. So let's say you got in right here, okay? Now you expect the market to go ahead and take out that buy side because I mean, shoot, we're bullish for the day. So that's what that was in your head. That was what was going on in your head. So let's say we get in right here on this candle, okay? So we get in right here, right? The market pushes up, we're up 92 points, right? 92 ticks, right? And the market comes back down. Remember, first of all, when we go into the trade, our stop loss was down there. Now, as soon as this candle closed, the stop loss came up here, it came up here, came up here. So, okay, so we would have probably lost 62 ticks on this one because, like I said, the market didn't keep following up through. The whole thing about this is, like I said, we trail our stop loss every bullish candle that we get. So on this one, we were just in the wrong. It was just bad timing, honestly, because even if we got it right there, we would have made some money if we got out over here. But like, there was no structure for us to get out over here. We're just going through like we are targeting this buy side over here to happen over here. Eventually, the market does come out to take it, but we just couldn't do anything about that. So we took the if you have taken that for you would have won this first trade, you would have lost this second trade. I mean, you made like 92, 132 ticks on this trade. Yep, right here. So if we got in right there, target that buy side, yeah. So 134, and you lost 60 ticks on here. So you still had 60 ticks left of profit. But after then, we were started heading to work because it's already 8:54. But what you can see is the market does come back after breaking that high. So now we have this little bearish shot right there. So the next buy side is going to be over here, and the next sell side is going to be over here. What does the market do after this? As you can see, the market doesn't even close bearish on here. It just closes at this black candle. Um, Being that we are super bullish, you could go ahead and try your luck and see if the market was going to continue in your favor anyway. So we had this down bar, because this low was violated right there. This was an up bar, up bar, up bar. I don't know if you guys notice. You see, every time you see how once the market takes that low, the market is going straight to the next buy side or the next sell side. Because immediately as this low was taken out right there, the market just pushed all the way up to the upside. No retest, nothing. Just the candle respecting, just candles respecting other candles. So let's say you got in right here at this high of a candle that happened right here, right? Let's say you got in right there. You go in and your stop loss to be down there for 103, and now I see you'd been taking that right there because this candle took out this. But let's say you weren't paying attention, you just left your stop loss over there the whole time. You would have made almost 200 ticks on that trade. But to be more realistic, if I had take this trade in the morning, I probably would have got stopped out right there because this candle took out that low right there. So this is a bearish. This is a bearish candle. Even though it's a bullish candle, it in respect took out that low. I guess you could just say it grabbed liquidity right there and just went all the way to the upside. But that's what happened in the morning. That's what happened in the morning session. And I mean, if you go more in depth, as you can see, the market just started respecting each other more. I mean, all we had after this was break structure to the upside. Came back to retest this order block over there. The market pushed all the way up, and I think I caught this trade actually on my Darwin EX account, my hedge fund account. I got in right here on this candle, and my stop loss was down here. My TP was right there. So just a, a textbook trade. Now then we had this textbook setup over here again. I mean, remember, so this is gonna become our valid low. Valid low. Okay, so valid low. As we can see, the market came back up here. So if you want to be safe or smart with trades like this, coming back to the order block. Let's say you don't get it right here because you don't know if the market's going to keep pushing down. What you would have done was just go ahead and start looking at the candles. We would have had down bar, up bar, down bar, up bar. So now that we have that, I mean, I would just say pretty much you get in right there, put your stop loss right there instead of putting it at the valid low. If you want to be extra safe, you can go ahead and do that, but you can just put it right there and target this next buy side. Because remember, that's what happens, and you can see the market just keep respecting. You can see the market just keep respecting itself all the way to the buy side. I mean, it doesn't get more clear than that. Look at that. Market goes and takes out the buy side. So this is almost a 3R risk to reward. Okay, so now that happened right there. So now this is going to become our valid low. This is going to become our valid low. And so this structure right here is what caused the buy side to be taken out. This structure is what caused the buy side to be taken out. And remember, this all happened on Friday. This is what caused the structure to be taken out. This is what took out this buy side over here. So now, if you look on the 5 minute, what most people would have done was they would be looking to get in right there on this order block. Now they would have been stopped out. But let's say you decided to wait, right? Let's say you decided to wait. You can see because the market doesn't show you any bullish candle in this scenario. We just have this strong bearish candle to the upside. Then we have this, I mean, down bar, down bar, down bar, down bar. So these are all of them down bars. There is no up bar right here. I mean, we do have some bullish candle, but it's not really bullish because I know how it was taken out, just lows being made. So 5 minute. Let's eliminate all this noise happening right there. So what do? We go up to a 15-minute time frame. Okay, beautiful. So now on the 15 minute, we don't see the order blocks or anything. We just see a candle. We just see pretty much a fair value gap. But this is what happens right there. I mean, so let's say you go into 50 man, you don't see any of that noise anymore, right? You just see this. So usually your order block could be right there, right? Because this is the order block you see on the 15 minute. Um, you go back to the 5 minute, you see what caused the order block right there. So and you'd be targeting this you'd be targeting this sell side over here. I mean this buy side over there. I mean this happened at 17, so the trading session of the day was already closed. So you except you just set a buy limit, then the market would have just tapped you in. But as you can see, to eliminate all this noise, you just go to the next higher time frame. Um, use your Fibonacci retracement tool, so you know as long as if the market doesn't come back, because we have this huge move to the upside, the market should at least give us a 50% retracement move. So that's what we're waiting for, and that's what we got right there. As you can see, I had this retracement tool to the 50 retracement line over there. We have a down bar, then we have this up bar. So if you got in right here on this trade, right? You got in right here on this trade, you just target your first buy side and your next buy side. That's almost 400 ticks. I mean, like I said, it is pretty much easy to do this. Something I did forget to show you guys was the 2:50 p.m. session time that I trade. I think this was 14. Okay, okay, right there. So at two, usually I usually trade like from 2:50 to 3 p.m. right there. So on at this time, the market was really, 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 really. I mean, choppy. There was really nothing here to trade. I did take a couple some trades, but it wasn't anything crazy. Like I said, 8 out of 10 times you're gonna get really good moves at 2:50 to 3 p.m. But 2 out of those 10 times you're gonna get some choppy trades. But I mean, nothing good really happened over there. But like I said, we're just going using pretty much structures. All we used in this video was the five. If you only use the 5 minute, 5 and 15 and 30 and upwards, you'd be more successful, honestly. Because I mean, look at the structures. I mean, over here it is a little bit messy because this is like 8:30 and all the volatility in the market. But I mean, look, I mean, you had this breaker struck to the upside of a buy side takedown. The market comes back to retest. You push all the way to the upside. I mean, look at this breaker structure to the upside right there. If you had waited for this candle to happen, so you would have down bar, down bar, up bar right there. If you had gone in right there, you got in on behind this candle right there. You put your stop loss over there. You would have targeted this high right there. A 1 to 2 risk to reward over there. I mean, it's pretty much easy if you use the 15-minute time frame. Um, I don't use the 5 or 15 minute time frame or 4 minute that often because, like I said, I'm looking to scalp moves. I'm just looking for so like this is to me this is not a bad scalp at all because the market goes. I mean, the only time you would have a problem is right there. So maybe you didn't catch this whole move because the market would have taken you out right there. Because if you got in right there, the market took you out over there at 105 ticks because of this bearish candle that takes out this one over there. Because we have up bar, up bar, up bar, but this candle right here takes out the high, takes out the low as well. So this has become a down bar. Then we have an up bar, up bar. I mean, but that's pretty much it, guys. I mean, that's everything that happened. Hope you guys liked the video. Hope this was helpful some kind of way. As the days goes, as soon as I have more time, I'm gonna go more in depth on how to count the structures, how to count the candles, so that way you get into good trades. But this is pretty much what happened on Friday. I hope this made some sense to you. If you guys have any question, leave a comment below. I would love to answer and see what you guys think.